What is going on, guys? I hope you are all well. In this video, we are going to break down what is in store perhaps for next month based on some historical price action, some historical data. Now, again, I know you guys love these videos. We're going to get into it. We're going to break it down completely. We're going to look at why I have been calling 3846 on my social media here for quite some time now. Since last week, you can see 3846 right here. That was my next level. That's what I'm targeting. That's what I'm looking at. I'm going to explain it right here. Okay. Again, you guys know at this point, we've been on a 9-week bullish streak. We can see right here in 2025. And we've recently had the sell-off. Now, around this time is where I called this sell-off. As this week was pushing up here, was creating all-time highs, right? I called it ahead of time based on this pattern that we have seen back in 2026 and 2020. But now we're going to break down what's next, because we've had the 9-week streak. We've had the highest volume candle. We've had then the sell-off, and now we have 3846. Is this going to come into fruition? And basically, this level is based on the 50% range, or the 50% level of this range right here, from the very low of that first bullish candle to the high of the bullish candle. This is the 50% correction. Okay. Now, what is ahead for next month? Because we have now had a monthly closure and we are now going into November. Okay. So what's next? And to do this, we're going to look back at those two other times that gold went on a 9-week bullish winning streak, or bullish streak, whatever you want to call it. And if we have a look right here, we can see 2006, we can see 2006, and we can see 2020. Okay. And this is on the monthly time frame that we're looking at on these candles. And these gray boxes are where those 9 bullish weekly candles were. Okay, we can see from the monthly here, 2 bullish candles and then a rejection. Quite a strong move here. If we go on to the current chart on gold, we can see 3 bullish candles, and we can see similar price action at the top. Okay, now what do I mean by that? Well, after these 9-week bullish streaks in 2006 and 2020, we tend to have a sell-off. Now, this has only happened twice in history, the third time happening right now, I believe. The other time that price went past gold went past a 9-week winning streak, it went on to an 11-week winning streak, right? Which is where we saw like an even bigger crash on that as well. But basically, we see the move up to the top. On the 9-week bullish streak, we have a strong rejection, right? Similar move here in 2006 and 2020. And then the next month, we see that sell-off, or we see the bearish continuation here, and we see the bearish continuation here, all right? And then even further on after that, we kind of consolidate a little bit, pull back a little bit. We can see we pull back here, and then we continue the sell-off, So something that has happened in both of these times is that we've come into this 50% correction level of this entire move. Something we have not yet done on gold in 2025 during this current move. You can see right here, here is the 3846 level. You can see we came very close last week, but it has not been hit yet. This is why I have been calling, I've been saying, this is my final target for the move down for the time being, because we can see that once it actually taps into those areas, we see quite a strong rejection. All right. If I was to go on to the weekly, we would see, let me go back actually over here. Let me go back over here to the weekly so that we can see them there. Once it taps into that 3846 level, you can see, or the 50% level, we can see strong rejection here in 2020 coming back up. And if we go even further back to 2006, we can also see that once it taps into the 50% level, this one takes a little bit longer. This one takes 1 to 3 weeks. So that would also line up with the current structure of it taking 3 weeks right now in 2025, because next week we're going into the 3rd week of the sell-off after the 9-week pattern. And you can see right here, once we tap in there, we do reject eventually a fair bit up before we continue. And in both of these cases, we actually almost correct the full move. You can see we come down right down here into the start of this bullish run, almost taking it out, and we do it again over here as well. So we pretty much correct this whole move to the upside, back to the downside, whole move to the upside, back to the downside. We correct the full thing in the previous times that this pattern has occurred. Okay, so interesting to think about for now. So first of all, we need to look at the 3846 level that has not been met yet. We need to see that happening. We do know that each time that we have had this pattern, the next monthly candle has been bearish, right? Bearish sell-off here and a bearish sell-off here. So perhaps we can look at that happening coming into the current month of November. To add to this, right, because we need to have a look at the overall picture. I know a lot of you guys are talking about central banks buying up a lot of gold, China buying up a lot of gold, de-dollarization, the US dollar's going to crap. I don't want to swear on YouTube just in case this gets banned. And I know there's a case for that, of course, but we also need to look at what is going on right now. And in the last week, the US has had a lot of different macro fundamental geopolitical news that is affecting the US dollar, and in my opinion, making it stronger, making it bullish. And we can confirm that actually just by looking at the DXY. Look at the DXY. Okay, look at this monthly candle on the DXY, which is the dollar index, which shows us dollar if dollar is bullish or bearish. Look at the current move and the landscape for the dollar index. It is bullish. And even over the last few days or the last week or so, we've seen bullish momentum because of all of the news that is coming out. And let's talk about some of that. On Thursday, Mr. Jerome Powell here came out and he said that right here, December interest rate cut is far from certain at this point. He's saying it's far from certain. It is likely that there is not going to be another rate cut in 2025. This is very important, and a lot of people are overlooking this because back in September, when they cut the rates previously from 4.5 to 4.25, they said in their own FOMC forecast that rates were likely to move lower over the remainder of 2025, with 2 more cuts the most likely outcome, right? One of those cuts would have been yesterday, and then the second one being December. But now they're saying that this is far from certain, right? And in my opinion, if you know about fundamentals a little bit, if you look at gold over the past, however long now, since September, since they said that, which would be right here, right at the start of this bullish move, when they said 2 more rate cuts are likely to happen in 2025, that rate cuts mean a weaker USD and obviously then a much stronger gold. So the market or gold has priced in these 2 rate cuts already, in my opinion. That's why we saw this massive bullish move on gold, as well as other things that was going on in the world as well. So the market, in my opinion, has priced these rate cuts in, but now they're saying, oh, well, we're not sure actually about the December one. With the government shutdown, we have a lack of data, inflation is rising, we don't want to cut rates again if inflation is too high. And we've also had other Fed members come out recently and also agree with Jerome Powell. Did I post this somewhere? I didn't post that, but we also had other Fed members coming out talking about they agree with Jerome Powell that they shouldn't cut the rates, right? So this is very important, very, very key. And this is causing a strong dollar because they were supposed to cut the rates, which would weaken the dollar. But now they're like, they're cautious about it. They're not sure. They're saying it's far from certain. So this instantly creates a bullish dollar, which again, if we go back to the DXY and we go to say the 15-minute time frame and we have a look exactly when those rates, or when he said that, when the rates and then the conference was right here. This was right at the start of this current bullish move right here that we saw last week, right on the dollar index. This is dollar strength. As we can see, a lot of bullish volume, bullish structure, price moving up, right? So this is supporting a bullish gold. As well as all of that, over the last week as well, we've had Donald Trump sign deals with Australia for rare earth and critical minerals, right? Massive billion-dollar deals. Then he flew to Malaysia and Thailand, or he flew to Malaysia and signed a deal with Malaysia for their rare earth and critical minerals, as well as processing in Thailand. Then he flew to Japan and signed another rare earth critical mineral deal with Japan, as well as other things. And then also to Korea, where again, signed more deals on rare earths and other investments. Korea has agreed to pay the USA $350 billion for lowering of tariffs, right? So lots of deals, trillions of dollars at this point of money invested into the USA, no rate cuts, and potentially for December, which is causing a bullish dollar. Trade deals, as well as then the potential trade deal with China. We've got 18 hours ago. Treasury Secretary Bessent says US and China plan to sign trade deal over the coming week. And we've had all of this news coming out. We've had the meeting between Trump and Xi, which seemed very positive. Seemed very much like there was going to be some sort of positive outcome and deal signed, and a lowering of tariffs, and the China buying, 180,000 tons of soybeans, and all of these things are coming out. This is all making the dollar bullish right now. It's causing risk on sentiment in the market. So people are going to start, getting into kind of like your stocks, your equities, cryptos potentially. And is causing a bullish US dollar, as we can see. So all of this could start to play out, the technicals aligning with the fundamentals, to give us that extra push next week. Let's see what happens over the weekend, right? Let's see. Trump likes to release news and start talking about things over the weekend. He likes to leave it to the weekend so it doesn't affect the market too much in the week, in my opinion. So he may come out and say something. He's also talking about the government shutdown and how the radical left and he doesn't want Americans to go hungry, and they're now starting to tackle this issue. So let's see if he says anything over the weekend to do with China. He didn't really have a press conference or mention too many things about the China meeting or trade deal. Maybe we'll see more of that to come next week, or even this weekend perhaps. But that will be interesting as well. So that is it. That is the analysis we can see from history previously in 2006. After this 9-week bullish run, we had strong rejection and pullbacks and a bearish monthly closure. Strong rejection, pullbacks, bearish monthly closure. First of all, we came into the 50% correction, and then pretty much almost down to 100% correction of that move in 2006, in 2020. And if we look at right now, we are having, if we go to the monthly, strong rejection. I mean, it's not as strong as those previous examples. These monthly candles did close bearish, but we have a strong rejection right here. So there is a possibility, right? This isn't a prediction. I'm not saying gold is going to sell off next week. It's not a prediction. I'm just bringing you the evidence, the data, the information based on history. And we can already see from my previous videos that the history so far is repeating almost identically, right? 9 bullish weeks and then the sell-off into the 50% level. Almost identical so far to these previous 2 examples where we saw this right here, 9 bullish weeks, sell-off into the 50% retracement level, right? Or 50% correction level. And then we go back to the 2006. Again, we look at 9 bullish weeks and the sell-off, right? Into the 50% correction level. So far, this pattern is following the previous 2 examples. It may not follow it from here. Who knows? I'm just providing you the information. I'm showing you the data. I'm showing you the patterns, and it's up to you to make your decision. This isn't any sort of financial advice. I'm just giving you my thoughts on the market for what is ahead. So my target is still this 3846 50% correction level based on that previous data. Let's see if this can come through. It was a beautiful week last week, riding these sell-offs again to the downside, catching this move down over here on Monday that occurred right here, this move, and my entry actually was in right in here somewhere. right here. And I rode that down into 4,000 right there. And that was my target. I talked about this on my social media, on YouTube, everywhere, that I was targeting that 4,000 level first of all. And basically we had a bearish bias. We had rejection of one of my discount zones. You can see right here, price pulls straight back into my discount zone. A lot of rejection. And then we got a 15-minute entry signal here from the V6 indicator. Not going to go too much into detail on that. I'm sure you guys have seen it, but that was my trade this week. 1 to 4 over 700 pips, and price continued after that for thousands of pips after. So it was a beautiful week, a lot to digest, a lot to think about. Let's see what next week brings. I hope you guys enjoy the breakdown. I hope you guys are enjoying the ongoing story of this pattern on gold at the moment that I've been covering on my socials. And if you want me to cover anything else, please let me know down in the comments. I appreciate you. Much love. God bless. And I'll see you in the next video.